let's go ahead and get to the next part of the program. And again, this is just our monthly reminder of what we're here to do. And we do convene monthly, generally towards the end of the month, like it says there. We are serious. We want to do what Ken was just talking about, that long-term relative return of plus 5%. And we also want to have the majority of our selections outperforming the stock market index, but what it all adds up to collectively is really what we pursue here. So again, that's what we're here for. That's the challenge that we take pretty seriously amongst ourselves. So with that, we'll just take a quick run through the scoreboard. Again, we're not going to spend a whole lot of time on this other than to show that we keep score. As we were saying before the session started, these slides will be available in the Manifest forum, or you can email me at markr@manifestinvesting.com. I'd be happy to send them to you. But just we keep score of every selection made. At the very first meeting of the Roundtable back in July 2010, the first stock selected was Eli Lilly. And in fact, that has languished until recent months. And it actually trailed the market until fairly recently. And notice now that Lilly, and again, this is one of Hugh's selections where he said, don't worry, keep the faith. It's going to be all right longer term. Sure, every once in a while we get one that kind of goes haywire, but the total return on Lilly is now up to 9.3% during a period when the market has only advanced 2.1. So again, it's delivering a 7.2% relative return. That total return does include dividends. You'll see that reflected in the average cost. That's been going down because that's one of Hugh's lovely dividend stocks. So all the positions in that first 5 or 6 months are shown there. There's only one position that we've actually closed out so far in our roundtable sessions, and that was Strayer back in December 2010. We got cold feet, and it looks like we got cold feet at a pretty good time on the Strayer. But again, you can go through every selection and see. I will point out that the numbers on the right-hand column are turning greener than they've been in some time. We've got a few that are giving us a little bit of heartburn. That pulled pork out of China, ticker symbol hogs, continues to give us a little bit of heartburn, but we're just, I don't know, maybe we'll have to rake that one over the coals again, or put it on the Barbie next month or something.
Well, between the pulled pork and the financing coming out of our own Bank of America here, we'll have to take a look at both of them here, you know.
I'm thrilled with Bank of America management. They discover new ways to push their stock price down.
Could that be an accumulation coming our way? Here's the second group. Yeah, you see Bank of America is in there. I didn't realize it was all the way down to 6 again. Oh my.
Yeah, I know, it's very painful. But I've been buying Bank of America, you know. Who knows how it'll pay. And I'm kind of surprised at Staples, how badly it has done recently.
Yeah, but again, it's not doing that badly when you compare it relative to the overall market. You know, again, I see it as one that could recover pretty substantially. Then here's the most recent selections. You can see there is a fair amount of green there. We will give a nod to our guest damsel from Houston, Ann Manning. Adobe's in, even though, again, that's what I mean by context and perspective. I mean, even though it's down 12.8%, Adobe at the top there, it's actually outperformed the market since selection. So again, again, think about, you know, almost like an ocean with boats, and that's what we're trying to do, is get ahead of those. We are now up to, we were down in the 20% range for a while. We're up to 48% accuracy, which means half of our selections have outperformed the market during their time. We were down around minus 10% here. So again, I could swear every time I look at this, I hear Cy Lynch saying, patience, these things will work out. You know, we're picking companies that are poised for recovery. Sometimes it just takes some time. And so this is the number we want to be +5, like Ken's model clubs that he talked about. And we really do want this number over here to be, the 48% to be somewhere in that 60 to 70% range. And it will be. It will be ultimately if we just keep doing what we know makes sense and works. Just a quick look at the dashboard. I've split it into 2 pieces and sorted the Roundtable dashboard. It's a tracking dashboard where we take $1,000 at the time of the meeting or at the time of selection and invest them in these companies. Some of them are multiple selections, like Bank of America that you see at the top there. That's, I believe, 2-time selection of Bank of America. So it's actually gone from 2,000 to this 1473 that you see, 1474 that you see here. Mouse is misbehaving on me. So that's actually down from 2,000. And Zhang Pin, I think, might even be a 3-time selection. So that's down fairly considerably. But being down, again, we're looking at some almost too good to be true projected returns over here.
Mm-hmm.
Mark, can you go over that accuracy rating one more time? We have a couple of folks that are asking questions about what exactly is that accuracy again?
Okay, just looking at this slide right here. Anytime the stock has outperformed the market since the time of the selection, in the case of Adobe, you can see that the number over here on the right is a green plus 1%. That simply means that it's one that's to the good. So what the accuracy is basically just adding all of these up. It means that 48% of the selections have these green conditions, have outperformed the market. You can see here's one that's right on the line. So it's literally the percent of the selections that have outperformed the market since the time of selection. So 48% of them. And it's kind of based on what one of the performance criteria used by the Motley Fool in their caps community. It's kind of a stock picking game, so we keep track of how much. And Ken and I are both somewhat active in that, and I think his accuracy over there is about 80%. Mine is like 60-something. So it can be done.
Mark, we have a question from Ann Cantrell. Ann, I'm unmuting you. Go ahead and ask your question.
Sounds like we're having a little trouble with the sound equipment.
Ann is having some sound issues. Ann, if you have that question, maybe you can type it in the question box, okay? And we're clear at the moment, Mark.
Okay, well, here's the rest of the portfolio. Again, the ones, and again, some of these are down in projected annual return because they're up in price, and that's the best way for projected annual return to go down. And up in price, I mean, this is another Hugh McManus selection that's down to 6.3, but that's still a very healthy projected annual return. $1,000 invested in Costco is now up to almost $1,350, so it's up 35% since it was selected a little over a year ago.
And there was a pretty reasonable question asked a few months ago about whether or not that should be sold. It's done so well that. Yeah.
Mm-hmm. And again, our thinking is that unless that par gets down towards the money market rates, or if the portfolio were to need it, Ken is a stickler on this. The portfolio doesn't need a whole lot more than 17, So the portfolio will help us make that decision if we listen to it. That's what we spend a lot of time in our dashboard diagnostic sessions also. So again, these are here for you to peruse at your convenience. And with that, we'll go ahead and go into the stock selection part of the session. I'm first in the batting order tonight. That's probably because I thought the Cardinals had a night game tonight, and I might have had to sneak away, but no. They're already, I think, beaten, I believe. They were behind in the 9th inning. My selection is still to be determined. You'll learn more about that here in a minute. I'm actually wrestling with 3 companies, and I couldn't make up my mind, so I thought maybe I would defer to the audience to help me out tonight. This is something a little bit new. We'll give it a try. Ken's probably getting the heebie-jeebies over there, but he can deal with that. I'm going to talk about 3 companies real briefly, and then I'm going to basically ask the audience, and we'll see what you guys think. We'll see how this goes, and maybe it's something we'll do more often. What you see here is one of our chronicles at Manifest Investing on Urban Outfitters. I think many of us know the company. It's kind of a specialty retailer. It does tend to cater in general. I'm speaking very, very generally here and very carefully to the younger crowd. Quite an impressive track record when you look at the fundamentals of the company. And what you see here is, well, first of all, the stock price is in green. The stock price is in green, so you can see that it has fluctuated from these peaks back here a few years ago. It took a pretty good dive during the Great Recession, and then it actually did a pretty strong climb up, and now it's taken another breather here. So the company is actually showing up on a number of our screens. We've picked it a couple times for our monthly stock study feature in our Manifest Investing newsletter because of this price volatility. You can also see that the quality of the company has been consistently in the excellent range, basically just kind of trickling around in a fairly tight range here always in the excellent zone. And you can see that the projected annual return, again, that would be very comparable to your Section 5 results, has fluctuated from very close to zero here to peaks that are actually up in the 30s, as Ken was talking about just a few minutes ago. And one of the things that we've added to the Chronicles, which we think is fairly important and informative, is the relative return is actually on here. This red shaded area that you see here, this red shaded area that you see is the relative return over time. And again, that's a forecast condition, and it's the par of the stock minus my par, or the median for the market. So anytime this is in the positive area, like you see in these areas here, it's basically slated to outperform the market. We look for stocks that are in the 5 to 10% zone. We call that the sweet spot. So you can see that Urban Outfitters is currently in that sweet spot of somewhere between 5 to 10% above the median stock right now. So it's a stock that with its very high quality rating, and its sweet spot condition when it comes to the projected return is in pretty good shape. So that's door number one. Door number two, and this one is for the feisty people in the crowd. It's one that we've talked about a little bit here recently. First Solar. I think it's an example of a company that is getting absolutely crushed because of that other solar company that's not doing very well. Ken, I'm picking up a little bit of breathing noise. You might want to make your adjustment there. And First Solar has been crushed in price here for fairly recently, along with that company that went bankrupt in California. You can see that this, for a company, if you're going to do some speculating, that would be a pretty nice reward. The low total return forecast is nearly 40%, and I think it's even dropped a little bit from here. And the reason I bring this up is this is not Solyndra. This is a company that has been in existence. They're making real product. Take a look. It has a 5-year track record. I want to draw the audience's attention to the fact that they are actually selling stuff.
Yeah.
In the billions. They are also making a profit. Look at this profit trend. Now again, there's nothing saying that this company couldn't have extreme duress or financial difficulty going forward, but so far they've navigated through the Great Recession and some fairly serious challenges. I believe without a whole lot of government subsidization, or whatever you want to call it, subsidies from the government, they're making a profit, and it's a real company. And in fact, I'm intrigued. I did dig deep enough because I'm an engineer from the power industry as part of my background, and they're doing some very interesting breakthrough on the economic side. They're actually getting down to the point where they could be operating where the cost to deliver the energy from their product is as much as 20% below the market price for retail electricity. And once they get into that spot, they're kind of like home free. So again, this is not Solyndra. That's the message here. Yet they're being treated by the investors as another kind of crazy company. So again, door number two is highly speculative, but a fairly high potential return. I don't want to go on this one by myself because I did pick Research in Motion and Logitech and a couple other recently, and I just need some help on this one.
There's one comment I'll make, and maybe if there's an accountant in the audience, he or she could chime in. But there is right now an accelerated depreciation that you can get for investing in, say, solar panels on your house and so forth. So you can write it off actually in a year, I believe. And I think that goes away in December. It might last another year, but I'm reasonably certain, not 100% certain, that it goes away in December, which might hurt all of these companies actually.
Yeah, I think.
I'm sorry. Go on.
Yeah, go ahead. Go aherd and pull it up, Ken. What do you got?
We have another couple of questions also besides that question from Hugh. Herb Lemkel is making the point that if you look at the insider decisions right below the projections box, nobody's buying the stock on the inside, only selling it. And then John Batta from the Bridgeport Model Club is telling us that the current price today on First Solar is about $58. So it's
Right,
about
that's what I thought.
$21 beneath the value line price there.
So it's basically into the upper 40s for projected return, I would bet. We took a closer look at it. So it's clearly speculation. I'm not
Yeah.
saying it's anything else. And you're right, Hugh. I think
Hugh,
Sorry,
Hugh,
go ahead.
we have somebody in the audience, Sherry Aleshouse, and Sherry
Excellent.
says First Solar doesn't make panels for houses.
Oh, okay.
It's working on this, but it doesn't involve itself with that business at this time.
So it's not in the consumer part of the market. Okay.
no, they're more on the commercial end, for sure. So
Mm-hmm.
it's a fascinating situation. And again, if they get down to the price threshold, could be quite interesting. Let me go to my third, and it's just simply a very quick stock search using manifest investing, where I call it my ivory screen, where I go out and I look for the manifest rank being the top 1% of all companies that we follow, and I combine that with the Fool's All-Star. It's from CAPS. It's the number of all-stars, so it's a sentiment indicator. So basically what I'm looking at here is a list of stocks that are in the top 1% based on their combination of quality and par at manifest investing that are also in favor in the general universe of sentiment out there. And the reason I bring this one up is it's already in the portfolio, and it's one that Cy has picked a couple of times, and it's one that has been beaten up by the short sellers. We have not yet found a whole lot wrong with the company. It's a rapid growth company, relatively small, strong balance sheet, strong, very good financial strength, very good looking visual analysis for the company, and again, it's high quality with high projected returns. So what I'd like to propose that we do is just submit it to a vote, and I didn't put together a poll for this one. Ken, could we perhaps do a show of hands using door number 1, door number 2, and door number 3? Ken's good with watching the audience stuff there. Is that something that we could do, or would it be better to put together a poll and come back to it, Ken? What are your thoughts?
Mark, give me a couple seconds and I'll have a poll set up here, okay?
Okay, I'll tell you what. Why don't we use that and close the meeting with it, and we'll just segue on. Everybody can chew on it. And we'll segue on to Kim and let her give it a go, and then we'll have the poll ready to go.